Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest Tesla stock news for their TSLA stock and how their Q2 earnings report is coming up soon, so we will be going over the latest predictions for that and their price targets. Then after that, we're going to be talking about the latest NIO stock news, as well as its price targets from recent investors and analysts who are currently covering the company. For more videos on the electric vehicle market, or for more individual videos on Tesla stock or NIO stock, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. If you didn't know, Tesla is the leader in electric vehicle manufacturing, and they also have multiple other core businesses. However, they're most known for their electric vehicles. Currently, the TSLA stock price is trading at around $737, while very negative bearish analysts and investors think that the company is worth somewhere around $380, while very bullish positive investors think that the company could be worth as high as $1,355 in the next 12 months. Also, what we're going to talk about today is their earnings report, and I'm not going to spend too much time about this because this earnings report is actually supposed to come out today, which is in the next few hours. So for their revenues, we want them to at least beat $16.88 billion for their Q2 revenues, and for their EPS or adjusted earnings per share, we want them to bring in over $1.83. And if Tesla brings in a lower financial metric in either of these categories, it may reflect negatively on the TSLA stock price, which is their ticker symbol. Now, I do want to point out in regards to the revenue that this would represent around a $2 billion decrease sequentially from their Q1 report. And this is because recently Tesla has experienced headwinds in Q2. On the profitability portion of Tesla, they will be releasing and reporting their adjusted net income, operating profit, and earnings before tax, depreciation, and amortization metrics, which are supposed to come in higher on a year-over-year basis. However, these metrics will also come in lower than their Q1 results. Investors are very focused on the long-term trajectory of the TSLA stock and Tesla as a company, and even though this particular quarter isn't going to be as impressive as their Q1, I still think Tesla is on a good growth trajectory right now. We're also looking for Tesla's management to reaffirm their 2022 delivery target of a 50% CAGR, which is their compounding annual growth rate year over year. And that would mean that Tesla should deliver around 1.4 to 1.5 million vehicles during the full year of 2022. Recently, a Deutsche Bank analyst actually anticipates and projects that Tesla will in fact maintain their annual delivery target, thus meeting that 1.4 to 1.5 million vehicles delivered during the year. And he actually thinks that this is going to operate as a very impressive catalyst, which could increase the overall TSLA stock price. But even with that being said, I do want to point out that Tesla's TSLA shares are down around 31% year to date, even though they are still technically up around 10% over the past year. In essence, it really doesn't matter the metrics that Tesla will bring in for their EPS or revenue for this particular quarter, because investors should already be anticipating some volatility both in the stock price and these various metrics. However, if we look at them from a year-over-year increase, if we compare Q2 of 2021 to their 2022 Q2, or their 2021 Q1 to their 2022 Q1, we can see a vast improvement. I also want to point out that we could also receive an update regarding the production of their Cybertruck, which is supposed to begin next year. I also personally would like an update on their robo-taxi development, because I want to know if it's on target to fully be launched in 2024. However, there is a chance that this could be postponed until 2025, so in this recent earnings report, we may get more information and news on those. I also want to point out that Tesla, Rivian, and NIO stock have all decided to increase in price recently, along with the majority of the overall stock market. So why is that? Why all of a sudden do we have a very positive development in the broader stock market, particularly for several electric vehicle stocks and companies, which would include Tesla's TSLA stock, Rivian Automotive's RIVN stock, and NIO's NIO stock, which we will talk about later in this video. Currently, two analysts have been covering Tesla, Rivian, and NIO, and they do tend to see eye to eye Also, according to the Wall Street Journal, a Goldman Sachs chief economist said that it's very likely that the Federal Reserve, instead of increasing interest rates by a whole 100 basis points, they are actually only planning to increase it by around 75 basis points, which is actually very positive, and the overall stock market is reacting in a very bullish way because of this development. This is why indexes such as the S&P 500 and the Nasdaq Composite are actually trading higher lately, and it's no surprise that growth stocks, particularly electric vehicle stocks like Tesla, Rivian, and NIO, are all climbing and increasing based off of this news, which actually should reflect very bullishly on technology and growth companies. A Barclays analyst actually recently raised his price target for Tesla stock from $370 per share to $380 per share for the next 12 months. The analyst also believes and projects that Tesla will increase their overall deliveries and production numbers past the second quarter of 2022. So really, we're just waiting to get through this rocky time in quarter two of 2022, and then beyond that, we could see very positive developments for the TSLA stock and Tesla as a company. He reiterates that right now is a very compelling opportunity, that right now the market has given investors a very compelling opportunity to start to buy more TSLA shares. He also comments that Rivian has a buy rating right now. However, he did lower his price target from $69 down to $46 recently, but that still equates to around a 45% potential increase that the RIVN stock could achieve over the next 12 months. So overall, it is looking very positive for electric vehicle makers and manufacturers right now in regards to Tesla, Rivian, and NIO. Tesla has a very clear growth trajectory ahead of it, and they are building on their business fundamentals. So even if we do not meet the current financial metrics for their quarter two report, we can at least anticipate that quarter three is going to be significantly better than quarter two, even if they do miss these particular financial metrics. And because Tesla is a leader in the electric vehicle space, we can see how a rising tide lifts all boats. So as Tesla continues to do better and increase in their stock price, this is going to reflect very positively on Rivian stock and NIO, who are set to release their earnings report sometime around August 11th. Now let's talk about NIO specifically. Right now the NIO stock trades for around $20 per share. However, very negative investors think that the company is actually undervalued right now because at minimum they think that the company is worth $25, and again, that's on the negative bearish end. The more bullish investors think that the company could surge all the way up to $66 per share. Recently, the NIO stock has lost some of its value at around 3%, and it's still hovering at around that $20 price target. Now, the good news is that stocks in Europe are actually increasing in their overall stock price, and this has influenced stocks both in the United States and abroad, even if they are ADR shares. Now, the reason for this rally in Europe is because the European Commission recently announced that some of the sanctions on Russia will be lifted to resume food trade. And although I don't really necessarily agree with this, it is technically going to be good for business. Now, NIO does have competition from XPeng and Li Auto, which are both down around 5.4% and 4.7% respectively. However, NIO individually has also maintained around that $20 price target, so is right now a good time to buy NIO stock? Well, actually, it depends on what type of investor you are, and I can't say because I don't know your investing style or your risk tolerance. The best thing to do now is to lower your average cost if you are long on this company without overexposing yourself more than a 5% allocation, which is just my personal opinion. Always remember to do your own research. The reason why the NIO stock is down and why many growth stocks are down over the last couple of days is because the CPI, or Consumer Price Index, which gauged the inflation in June, was actually higher than anticipated, and as inflation continues to rise, it just dictates how out of control inflation is, which is going to reflect very negatively on growth companies. But for the month of June, NIO did not do that bad because they delivered 12,961 vehicles, while their competition, which is Li Auto, delivered around 13,024 vehicles. So literally these companies are neck and neck. So the month of June was not a total blowout for NIO stock. They are still staying and competing very competitively with the current competition over in China. I also want to highlight that taking the June metrics from 2022, and if we compare that to the June metrics of 2021, we get a year-over-year delivery growth increase of around 60%. 60% or above, and that to me is absolutely phenomenal, with Li Auto currently trading at around $35, with price targets from professionals ranging between $27 and $61 per share. Lastly, I want to follow up on the short report that was released regarding NIO stock and how they are fudging their numbers in terms of revenue and net income. And that short seller report came from Grizzly Research, who alleges that NIO has been inflating their revenue and net income margins, and they are doing this through their battery as a service offerings. So on average, a battery as a service subscription lasts close to around 7 years. However, instead of recognizing the revenue each year for each of the 7 years, apparently, according to their accounting principles right now, they are recognizing all 7 years worth of revenues from their BAAS program all in the same year, and that is clearly going to throw off revenues and their overall net income. So this is inflating the revenues by approximately 10% and their net income by around 95%, which is absolutely not good if this ends up being true. Now, we did cover last time I talked about this that NIO responded in a very roundabout way, saying that these allegations have no merit and they contain many errors. However, NIO hasn't actually shown from an accounting perspective that they are not doing this, which is somewhat concerning. However, the company did release an update recently how they now have an independent committee that is currently investigating these allegations. And the reason why this is an independent committee and it's not done internally within the company is to avoid any bias. And I actually think that is a good thing. However, regardless, if this ends up turning out to be true, this is going to be catastrophic for the NIO stock price. But if it's not true, I anticipate that the stock could aggressively rebound if these allegations are proven false. Now, finally, at the end, I'm going to end on a positive note that NIO is actually easing their overall credit policies, which is allowing more consumers to purchase their electric vehicles, and this has increased the overall demand for their Chinese electric vehicles all across the world, and they are also continuously innovating and expanding globally without trying to be centralized just in China. So these are all very positive developments, and we are still looking to see what is going to come of that short seller report. Is it true? Is it false? And of course, we are waiting on Tesla to release their Q2 2022 reports so we can see if these current projections from analysts as well as stock professionals either meet these expectations or they do not meet these expectations, which could reflect either positively or negatively on the TSLA stock price. But with that being said, I would love to hear your thoughts down below. Subscribe if you are new, smash that like button for more videos like this one, and I will see you in the next YT video.